Hello, everyone. I'm Stephanie Peters, the CEO of the Virginia Society of CPAs, and I am joined today by Steve Bulger, who is the Regional Administrator for the Small Business Administration Atlantic Region. And Steve is also serving as Acting Regional Administrator for the Mid-Atlantic Region. Bruce Whitehurst also joins us today. He is the President and CEO of the Virginia Bankers Association. So welcome. Steve and Bruce are here joining us today to talk about the latest on the Paycheck Protection Program, or the PPP, which of course is the relief program established by the CARES Act and is implemented by the Small Business Administration and also distributed by the banks. And Congress and the President just passed another $320 billion in round two of the PPP, which started today. So Steve, I'll start with you. What is different about this round of the PPP?
Sure. The round two, as we're calling it, of the PPP does have some differences. Treasury and the SBA came out with some additional guidance basically in response to the outrage over many very large companies getting these loans that were intended for small businesses. So there have been some guidance issued that really restricts a lot of these much bigger companies from participating. And in fact, we're seeing some of the companies that got funded in round one are actually returning the money. And we expect more to do that just because more of a PR perception problem for them than anything. They didn't do anything illegal, but it just didn't work out. So that's one. Probably the biggest change this time is that Congress set aside $30 billion for what they identify as small community banks and lenders, CDFIs, credit unions. And that $30 billion is really, you have to be in that small category to be able to access that. Then there's another $30 billion on top of that for what they're calling medium-sized lending institutions, and then the wider $250 billion, which is open to everybody, including the large banks. So that's probably the two biggest things that we're seeing. One of the changes is there is some restrictions being put on the actual application process in terms of how many loans you can upload, because as you mentioned, the program did open this morning and there was just a tremendous surge and crush into the system, and that is being regulated. So a lot of banks and lenders are having to wait to submit their applications because there is a restriction on the number of loan applications we can handle, just to make sure the system doesn't totally crash. So those are probably the three biggest changes from my perspective.
Okay. Do you have any idea the time frame of the funding? Do you expect that it's going to run out quickly or not as quickly as last time? Any thoughts?
I think it actually will be quicker than last time, and here's why. The first round was $350 billion. That was over 13 days it took to use that up. And initially, we only had about 800 to 1,000 lenders participating in the first couple days, as there were some hiccups getting the system set up. It was all thrown together pretty quickly, but over the round one time frame, that 13 days, every day more and more new lenders came on, and we here at SBA could just see the numbers accelerating of applications received and the approvals going out. So really, by the last 24 hours of round one, we did almost $60 billion in approved lending, which was phenomenal. But so right now there's 5,000 lenders that are trying to access the system. So my guess is, a total ballpark, I would think by the end of this week, that $310 billion is likely to be all spoken for.
Okay. So you are optimistic that some of the smaller businesses will be will they be able to go to the front of the line, or how will that work exactly if some other businesses are still in the queue?
Yeah, it's a good question. Two answers to that, why I am more confident this time. First is a lot of the larger banks, and they have tremendous processing capabilities compared to a small community bank. A lot of their round one companies that the applications they submitted were for their larger small business customers as defined by the SBA. So what we're seeing today, and what I've been talking to some of the larger banks, their applications are for their small businesses now. They're getting to them in this round, I think, a lot more. So the average loan size is going down, which indicates to us, from what we're seeing even early today in the first submissions, that they're focusing more on smaller companies. And then second, because we have so many community banks and credit unions and CDFIs now who really do work with the smallest of small businesses, they're all already engaged as well. We think there's the number of really small businesses will be higher this time. The average loan size will be smaller, but a broader participation would be our guess.
Okay.
Stephanie, if I could add to that, if I may.
Absolutely.
I think even in round one, and Steve, I'm going to do this from memory, but there was a press release from Treasury after the funds were depleted, and I think it was 74% of the loans were for under $150,000. And I think round one was like 1.7 million loans around the country. So it is important to note that an awful lot of small businesses were served during round one. In addition, about 60% of the loans made were made by financial institutions under 10 billion in assets. So about 250 billion out of that 350 billion came from smaller banks.
And that's a great point. I want to pick up on that too. The community banks really did a great job in round one. They really stepped up. It was a tremendous effort for them. And there was a lot of focus on the big banks, what happened, but the community banks really stepped forward, and they should be very proud of the work they're doing.
Yeah, and then the second thing is, as Steve said, the number of lenders, the official number of SBA lenders at the beginning was 1,700, but I think, Steve, about 1,000 were actually active. But that's now 5 times as many, or more than, it's tripled, at least tripled in that 2-week period. And so, yes, a lot. I think I agree with Steve. If there's any funding left before the end of this week, I'll be surprised. But the second thing about the average loan size, and the reason I completely agree it's going to come down, that has not as much to do with the big company thing, is that the way Congress wrote the bill and the rule came out, I guess it was in the interim final rule from Treasury and SBA, the smallest of small businesses, independent contractors and sole proprietors, they weren't allowed to access until week 2, until Friday, the 10th of April. The funding was depleted by the 16th, and it was really difficult for everybody involved to come up with the metrics. How do you do a Paycheck Protection Program loan to someone who, by definition, doesn't have a paycheck? And so it was a completely separate set of rules, but those typically are the smallest of small businesses. So now they will have equal access. And I think that also will drive the average loan amount down this time too.
Okay.
Absolutely.
So Steve, can businesses apply for the PPP and still be eligible for other SBA disaster loans?
Sure. The PPP is really separate. The Economic Injury Disaster Loan Program, which we've already received close to 6 million applications from small businesses. That program, we are working our way through. Congress just authorized some more money. That's a big program. We do think it is going to be reopening soon. We're just trying to knock out some of the applications we already have. also, in terms of other SBA loan relief, if you have an existing SBA loan now prior to the start of the COVID situation, SBA is picking up for 6 months principal and interest payments on basically all SBA loans out there, 7A, 504, microloan, for a 6-month period. And that's a real advantage to some small businesses, you know, to really just take a little bit of pressure off on paying back those loans. And in the longer term, that'll be an advantage as well.
That's great.
And Stephanie, I would just add for your members that are advising small business owners, in addition to SBA programs, which are so valuable and helpful, any of the small businesses who have a commercial loan with their bank, they should be talking to their banker about payment extensions, about other things. Let's say, for example, there's a client who owns a strip shopping center and has tenants asking for rent abatement or rent deferral because of their situation. Then they can be talking to their banker about, okay, what can I do with the loan I have on this strip center because of what's going on, and I need to be flexible with my tenants. So we're encouraging that business owners talk with their bankers now more than ever about a full range of possible ways that banks can help.
Great, great. So Bruce, as far as talking with their bankers, what other advice can you give to CPAs about working with the banks on behalf of their clients in regard to the PPP? Anything you've learned from the last round that will help them navigate this process with the banks?
Yes, and I think Steve can probably speak to this too, but there's been a fair amount of confusion about the agent fee and the role of the agent. And AICPA came out last week with guidance, as I'm sure you're aware, Stephanie. And I commend that guidance to your member firms. They should certainly engage in dialogue among and between them, the small business client, and the bank to make sure there's mutual agreement and understanding of what they will be doing, and that the bank is in agreement to pay the agent fee. So that advanced communication is critical.
Okay.
Steve, you agree?
I totally agree. It's something we've been hearing about. The law states, Congress put it in that it has to be that the agent fees have to be paid through the lenders and not the borrowers. And that's caused a lot of problems because some of the lenders are saying no. And so it is an issue. We really don't have it's kind of not our fight, so to speak. Not that I want to pass the buck, but really we've been told that's something that has to be worked out between the agents and the lenders.
Okay.
And viewed as accretive to the lender's efforts to be more efficient in processing applications.
Amen.
So Steve, if someone already has an application submitted, can there be modifications made to that application once it's already been submitted? Because I know that as new guidance has come out, that there may be some changes that some businesses have wanted to make. Is that a part of the process?
That would be up to the lender because they're the ones who are actually approving the loans. All the PPP lenders have delegated authority, which means they basically make the decision based on the information they get from the potential borrower, whether the loan should be approved and submitted to SBA. So whatever they're willing to do, the problem is now we're already in round 2. It's going to be tough. I think if you were to pull an application back now and try and make some changes, you might not be able to get it into the queue again before the money runs out, as we talked about, by the end of the week. So there were some situations like that that I heard about, but that was for the lenders and the borrowers to figure out if it was worth it.
Gotcha. So you had mentioned a little bit about this earlier, but do you have advice regarding the self-assessment of need prior to applying for the loans, as far as if some of the big businesses that have been in the media and folks questioning whether or not there is that need. Is there some guidance that businesses can use in order to assess that need?
And I'll definitely want to get Bruce's take on this too, but the way the law was written, it was very general, that basically it states that if your business was impacted adversely by COVID-19, any part of COVID-19, that you are eligible for the program. And the way SBA and Treasury set up a lot of these rules, the way they set it up was it's really a self-assessment, to your point, and as long as the lender agrees that, yep, that makes sense, they can submit that application. And it really is, and the way it was also stated in the rules is that the banks are going to be held harmless here because they have no way to really tell. We don't at the SBA. So I don't know, Bruce, does that make sense from your perspective?
It sure does, Stephen. Here's what I'll say, Stephanie, about it. As Steve said, the bar in the law is very low, mm-hmm. and it really makes sense that it is because in many respects, the bank is kind of a pass through for SBA to get the funding out, and it's particularly when it comes to the forgiveness portion. And then the employer really is a pass through to keep employees on the payroll. And so given that it's called the Paycheck Protection Program, not the Small Business Survival Program, it's intended to keep payrolls going. So the bar was very low, and in the law and in the rules, the bar is very low. Is there a business out there that has not been affected by this crisis? I mean, there are some small segments doing way better. We know that, mm-hmm. in certain segment categories, but with those exceptions, everybody else has been affected, right? So I think that's the legal answer. The issue that has been stirred up because of these these larger than small business publicly traded companies who were able to access because there were some affiliation rules waived. And let's also be fair, they're pretty much in those categories: restaurants, hotels, hospitality, that were first and worst impacted. And so that is exactly why those affiliation and size rules were amended or waived for the sake of this program. But the public perception has been very negative, and understandably so, to the extent that the most recent guidance on this from Treasury, in addition to or outside of the law and the rule, the guidance now suggests, hey, if you have other means, maybe you shouldn't be attesting that you need this loan. That sets up a question that's purely hypothetical today as to how much Monday morning quarterbacking might occur in the future about who did and did not truly need the mm-hmm. funds. The test is not, are you on the verge of bankruptcy? The test is not, do you have other means? The test is, are you affected?
Right.
But the test and the reality of public perception are going to be two very different things, I believe.
Right.
Well stated.
Yeah. So moving on to the forgiveness and the calculations, I know there have been some questions about the 8 weeks and some concerns from businesses that have employees that are now unemployed and on unemployment, but they've gotten this loan. Is there going to be any flexibility with calculating your payroll other than in that 8 weeks from when you get that payment?
I'd say we'll have to wait and see. Obviously, right now, the guidance is the 8 weeks, and that starts from the day the borrower receives the first installment of of the loan. My guess would be the lenders in particular, and probably SBA and Treasury, would like to hold it to that 8-week period, so we're not dragging this out into the summer and it just extending things out, because that's, there's consequences to that as well. So as Bruce mentioned earlier, it's really designed, the program is designed by congressional intent to keep paychecks going over that 8-week period. And so I would say, until we hear otherwise, that's the rule on the books.
And here's what I would say. I think congressional intent was the 8 weeks. And I think that's why Treasury has been firm on not backing off of that. I also think that at the time, this crisis has been moving so quickly. Our learning about the crisis and its impact has been moving so quickly that at the time Congress passed the CARES Act, we still were of the belief that we might be able to have a V-shaped situation, a V-shaped recession and quick recovery. And in just a span of a few weeks, we've come to learn that it's going to be much more of a U and hopefully not a W. And it's going to be a more gradual, incremental return to a more normal economic operating environment. So Congress might have made a different call now than then. Mm-hmm. But the thing that's really come out of this, Stephanie, is it's almost like you needed the Paycheck Protection Program as is for everybody except the industries that have been shut down by state and local government orders, particularly state orders, restaurants, for example. And so when a restaurant owner has employees that are doing better on enhanced unemployment than they would earn coming back during this 8-week period, it is indeed a catch-22, because the restaurants can't even reopen until after the 8-week period has ended. So, so it in a perfect world, maybe there would have been just a slightly different design just for those who just really need to have their people on unemployment right now. But I think it's somewhat related to how circumstances keep evolving very quickly.
Right. Right.
I don't look for relief from that, though. I really don't.
Okay. Yeah. Okay. So Bruce, as far as determining forgiveness of the loans and the calculations, I mean, there are certainly a lot of questions around a lot of the definitions and the calculation. Do you think at least there will be some consistency among the banks in how this calculation is determined?
Well, yes. Let me say that we are waiting for guidance from SBA and Treasury on forgiveness. And again, what has been accomplished in a few weeks is monumental. And 90 days ago, none of us would have taken the other side of that bet. We all would have bet against the ability to do as much as we've done. So there's a lot to celebrate here. But moving this quickly, we've had this rolling guidance. And that's the only way that this really could have gone. Mm-hmm. So we're waiting on guidance with specifics about loan forgiveness. And one of the things that's and Steve mentioned this, but it's in the law and in the guidance or interim final rule, is that as with the application where the borrower attests to the need, and the lender is not responsible for validating that. With forgiveness, it's the same. The borrower provides the documentation. The lender ensures completeness of the information and says, this is all the information, SBA, that you need to then provide this percentage of forgiveness on this loan. Here you go. Mm-hmm. And the lender is not, unless the guidance suggests something different than the rule and the law say, would be a whole other conversation. The guidance, the lender is not going to be the judge and jury over the forgiveness calculations. Now, to be sure, they'll look at the calculations, they'll see if they make sense given the information the borrower has provided. But it's up to the borrower to provide the documentation of the payroll expenses over that 8-week period, plus the other permitted expenses.
Okay.
Steve, is that about right?
I totally agree. Well stated. And yeah, I mean, when you really think about it, we're going to have close to, by the time round 2 is over, 3 million separate businesses, separate loans out there of over $600 billion, all coming due for forgiveness within sometime in the month of June or early July. So that's going to be a real interesting period. There's no doubt. But I would absolutely concur, because it has been stated really in the rules that if there is something wrong, if there is fraud here, the SBA really has to go after the borrower, because the lender has really no way to independently verify this the way you would normally verify a regular loan with statements and collateral request, all the things. This is as far from a regular business loan as it gets, really. So I would agree, and I really think that the majority of these will be forgiven very quickly.
Well, Steve, I know you have to hop off very soon. Do you have any final thoughts you'd like to share with our CPAs?
Well, just appreciate the work you're doing. We do want to get that guidance. We know how important that guidance is going to be on the forgiveness. I think as we're like sprinting from one thing to the other here at SBA and Treasury. If we get through this round 2, then I believe, unless there's a round 3, and who knows, right? Congress might come back with the, because there's certainly not everybody's going to be funded that needs the money. So, but either way, I think you're going to see the focus on that shift to that, providing that new guidance and get out there to everybody. So as we get closer to the 8 weeks ending, I'd be happy to come back and give an update on that if that's helpful. But really appreciate what our lenders are doing and our CPAs, because we couldn't have done this without you at SBA. We really could not have. So my message is one of thanks to everybody.
Well said.
Thank you. Well, thank you, Steve. Thank you, Bruce. I know everyone is doing an incredible job trying to help these businesses. And I think that's what our members are out there trying to do as well. So I know good is being done, and we will get through this, but I appreciate both of your time today and all the efforts that you put into this. So
Thank you very much. Steve, great job.
Yeah, you too. Thank you so much. Thanks, Stephanie.
You all. Bye-bye.